Hi, everyone. I'm Anne McCabe, if we haven't had a chance to meet, and I am the CEO and a partner here at Curo Private Wealth, and I'm joined by my lovely partner, Teresa.
Hello, Atresa Roberts, COO and partner here at Curo.
And as we are sure you are well aware, we have experienced a bout of pretty significant volatility in the markets. It's happened pretty viciously and pretty quickly. So we wanted to hop on and record a quick video for you to go over what is happening and why, to provide you with some context about what
hmm
has happened previously in history, inform you about how diversified portfolios are actually performing this year. That is going to be the bit of good news that we have to share with you. And most importantly, give you guidance on what we think you should do about this challenging chapter that we're all going
Yeah.
through. So, Atrisa, why don't we start with what on earth is happening and why?
Yeah. So, I mean, if you've been paying attention even a little bit, you've seen that sweeping tariffs were announced on April 2nd. And while the announcement was not a surprise, how dramatic the tariffs were surprising. And many times when we think about markets, when things happen worse than what's anticipated, we typically see that volatility reflected in market returns. And that's really what we've seen over the last, I would say, 3 or 4 trading days. So while it's hard to calculate the average of the tariffs that were imposed, it may end up being around 25%, which is the highest rate we've seen since about 1904. So the dramatic nature of the tariffs have really affected volatility, which you have noticed if you've been watching headlines. And many investors, because of it, of course, have become concerned. Ann and I are fielding those calls and emails from each of you who have been reaching out to us.
Yes. So now, as promised, we wanted to share some context with you. So the chart
Mm,
that we are looking at, and it may be a little bit hard to read the individual points here, but every single word box that you see there along this chart are different crises and events that have happened in the United States and globally since 1970. So there have been some financial crises, some geopolitical events, etc. And the point of this chart is to show us all, is to help us kind of zoom out a little bit, because again, this chart goes back to 1970. And what we're looking at is if we invested $10,000 in the S&P 500 back in 1970, and the key here is we just let it ride through the ups and downs and through the crises and the events, we would end up at the end of 2024 with almost $3 million. So we love
mm,
this chart because anytime we're in a period of uncertainty, it is dangerous and also very easy to say this time is different. In each one of these events, surely it felt different. If you remember back to COVID, none of us had ever
hmm
been through a global pandemic before, so it absolutely was different. But the consistency in this chart is that if you stay the course as a long-term investor, you are going to be handsomely rewarded by dealing with these temporary bouts of volatility.
Absolutely. And what we are looking at here is a history of both bull and bear markets based on the S&P 500. This particular graphic that we're looking at goes back to 1942. So we are looking at several years of both bull and bear markets. The blue areas display the times when the S&P 500 was experiencing a bull market. The orange lines will represent when we were in bear. And as a reminder, a bear is at least 20% down from the previous high during that time period. Historically, the average bull market, so good times, think of the bull as raging and moving up, has been 4.3 years on average, with cumulative return of about 150% over that time period. In contrast to that, the average bear market has lasted about 11.1 months with a cumulative loss of about 31.7%. So while the pain of a correction in markets may feel like it's been happening longer than it actually has, historically we see that over the long term, we're going to get more good performance out of the S&P 500, and that the bear markets or deep correction times are shorter lived from a period of long-term investors.
Yes. And as of the date that we are recording this, which is April 7th, we have not, on a closing basis
Hmm.
anyway, technically hit that bear market territory of down 20% as of April 6th. Sorry, 7th market close. We are
Seven.
all the days are blurring together. We are down about 17% off the peak that the S&P hit back in February. So the last chart we wanted to share with you is a pretty powerful one, and this is showing if you miss the best days in the market. What tends to happen is the best days are clustered around the worst days. And so some investors will say, oh, well, when things get tough or there's uncertainty in the markets, I'll just sell and go to cash and get back in when things feel better. I can't tell you, right, Teresa, how many times we
Right.
have heard that if it were only that easy. But what we're seeing in this chart is if you were to invest $10,000 in the S&P 500 back on the 31st of December of 1979, so the end of 1979, and you let that go until the end of 2024, if you were invested 100% of the time through the ups and downs over the course of that 45-year period, you would end up with over $1.7 million. But get this, if you missed just the 10 best days over that 45-year period, think about that, 10 trading
Hmm.
days in 45 years, your returns were cut by more than half. You would end up with 762,000. So please remember, if your reaction is, I'm just going to go to cash and sit on the sidelines until things get better, it is impossible to time getting in and getting out, and you will likely miss a number, if not all, of the best days if you get out of the market. So we would encourage you to not do that, despite the fact that your human brain is telling
Right.
you that's what you should do.
Yeah, and we always remind investors that that second decision is often the hardest one, right?
Yes.
Emotionally, you react to the getting out, but getting back in is always the more difficult decision to make. So if you call either Ann or myself, we are going to advise against that decision.
Yeah.
So one of the things we also wanted to point out to maybe help lighten and bring some good news to this conversation is the importance of a diversified portfolio. So, for most long term investors, there is some asset allocation that creates diversification in your portfolio. You're not just owning the S&P 500, you own stocks of different sector weightings, you own international, you own both fixed income and cash. And this year, that diversification is finally working. So the returns that you've been seeing in the headlines, the S&P and the Dow, may not actually be as bad as you expect when you look at your overall portfolio returns. Because international stocks and bonds are outperforming US markets, the average 60/40 or moderate portfolio is down about 7% as of the time of this recording, or as of about April 7th. So the idea is that that diversification helps to reduce overall risk. Not all of the returns of every investment in your portfolio are directly correlated. And because of that, you may not be looking at as bad of the performance as you think you are based on the headlines you see of the S&P and the NASDAQ and the Dow. So try to use that as some context that your actual investments may not be as bad as what the headlines are reflecting.
Yes, and we are very excited as long-term investors to see diversification finally working.
Yes.
Over the past couple of years, it has been the US exceptionalism
Hmm.
story, and if you were not fully invested in the US, you probably likely underperformed the S&P 500 a little bit. So we're really happy to see diversification working again. It's something that
Yes.
we as advisors really recommend to clients. So we wanted to keep this really short for you all.
Hmm.
The last thing we want to share is what the heck you should do about everything that we are talking about. And here's the bottom line. We want you to ask yourself, has anything changed in your situation? And if the answer is yes, then you may want to make some changes. And
Hmm.
if the answer is no, Like I'm not comfortable, I'm scared, I don't know what's going on, I don't like losing money, which are all very normal things and we understand these feelings and they're absolutely valid. If you are feeling those feelings, but nothing has changed in your situation, then our guidance would be to stay the course.
Yes.
Remember that you are likely a long-term investor. And hopefully, if you are a client of Kiro's, we have prepared. We have been talking about the fact that volatility probably will come back. If you are retired, we have been talking about raising cash and making sure that we have plenty of cash sitting on the sidelines so that we can ride the waves when they come. So, as long as nothing has changed in your situation, our guidance would be stay the course. If watching the news is causing you to feel like you need to do something or make an emotional decision that you may regret for the rest of your life, we would kindly ask you to try to turn off the news, right? Turn off the
Right.
news, turn off the noise. If it is impacting you to that level, then please just turn it off because this too shall pass. We have gotten through lots of challenging situations in this country, and we have made it through 100% of those challenges every single time. It's just a matter of when.
Yeah. And like I shared with some clients today, allow us here at Curo to do the worrying for you. And you feel the need to take better care of your mental health, emotional health, turn off some of the noise. We always like to say zoom out, right? Think about things in the long-term perspective of your financial plan, of your long-term goals. And let's try as much as we can to be centered and not overreact to the news and the current volatility that we're seeing today.
Yes. So thank you for the trust that you place in us.
Yes.
Thank you so much for allowing us to do what we love to do each and every day. If you want to have a conversation, we are here for you. So please feel free to reach out. But we hope that this quick video shed some context and some light and perspective. And thank you again for the trust that you place in me and Atrisa and our whole team here at Curo. Take care.
Take care. Thank you.